please.
Hi, Richard Clarke. I'm the Managing Director at Bernstein, and I cover the online travel, hotels and cruise sector. Bernstein's a sell-side research shop, so we write investment research about the biggest travel companies, but we try and take a sort of industrial tilt at it rather than just focusing on the next quarter's earnings. In many ways, my job splits in half. It's half distribution, half fulfillment. On the fulfillment side, in general, things are good. Demand is still strong. Supply is quite limited, so that's creating a bit of excess demand out there, and that should be good for the pricing power. All of the stocks that I cover are quite expensive, and so that means that expectations tend to be quite high, and not all of them can get all the way to that. But I'd say in general that market is good. Over on the distribution front, things are a little bit more competitive. They've got to procure those customers every single day, and we've got some new entrants in that space. We've got a Chinese competitor in T-Com coming over trying to gain share, and then we've got the great spectre of AI over us as well. And what are Google, what are OpenAI, what are those companies going to do to the distribution sector? Yeah, so I think we've got a few trends. We sit here in Europe, across the pond, across the channel into Europe really. We've got the DMA, which is kind of holding back Google and probably helping the OTAs in the short term, and that's been a positive. And I have to see how regulation deals with AI to reach a full conclusion. But there is a risk there. I think just like apps largely replace website, the app may be dead at some point in the next decade, or at least partially dead, and people might be just doing their entire internet journey using some kind of AI bot. That's going to put a lot of power in that AI player, and that AI player may be able to do anything. You may be able to navigate to any website. So it is going to shake things up. In the short term, I would say it's probably going to be about raising volumes overall online, and that may be quite good for the OTAs, but they do risk some disintermediation risk as we go forward. Not claiming to have a full view of everything that's happening, but the message we've got is that debt availability to build hotels is getting a little bit better. The national lenders are out there lending a bit of money, and we can expect a little bit more new build activity and ongoing fairly strong conversion activity out there. There is money to be spent. There was a trend of private equity companies, I would say, buying up mono-brand hotel companies over the last probably 15, 20 years, and you're beginning to see some reversal of that. So we've seen that with, say, Standard Hotels, which has been bought by Hyatt. And I think we might see more of that, where these PE firms are saying, well, we need to get some returns out of this. Maybe we hold on to the real estate, but we're going to see a little bit more consolidation at the brand point. I think very much a feel for the industry. We can sit there talking to CEOs of big chip companies, investors who are investing in blue chip companies, and maybe just don't quite know exactly everything that's going on in the coalface. CEOs are very good at telling you the good news, and sometimes it's not always easy to work out what's happening beneath the surface. So what's happening here today will affect the big companies in the future. So I think it's that, at the coalface, what's really happening.